Hi, this is Rob Gabridge with Gabridge Wealth Advisors, here to talk to you about asset location. I've previously talked about portfolio construction, which is designing a customized investment strategy based on client goals and risk assessments. Once we've then made the security selections to support the strategy, we need to decide where to hold them. This is what we call asset location. And the goal of asset location is to minimize the tax implications of holding the assets that support the investment strategy. Now, asset location doesn't have anything to do with geography or offshore accounts. Asset location is based on the tax treatment of different account types. So let's take a look at how we go about deciding where to locate the individual securities. On the left of this chart, we'll go ahead and list the different account types, which is what we call location. At the top, we have pre-tax or tax-deferred accounts, which are your 401k, 403b, and traditional IRAs. In the middle, we have our post-tax or tax-free accounts, which are Roth-type accounts, both 401k Roth and Roth IRAs. And at the bottom, we have taxable accounts, which are basically your individual and joint accounts. And we arrange them this way to have the most tax-efficient account types on the top and the least tax-efficient account types on the bottom. Now let's take a look at the types of assets to allocate to each of the account types for tax efficiency. And to maximize tax efficiency across the entire portfolio, we want to allocate the least tax-efficient securities to the most tax-efficient accounts, and likewise the most tax-efficient securities to the least tax-efficient accounts. So in the pre-tax accounts, we want to hold high-yield bonds, taxable bonds, and real estate investment trust type securities. And the reason is that these securities generally pay relatively larger dividends or interest payments. In the tax-free accounts, we want to hold securities that generally pay little to no dividends, but have the most potential for appreciation, such as small and mid-cap index funds, international stocks, and value index funds. In the taxable accounts, we want to put the tax-managed funds, total U.S. index funds, and tax-exempt bonds. And these securities generally pay small or no dividends and have little turnover or are tax-deferred or exempt. Now, this chart definitely does not cover every type of account and every security that you might hold in those accounts, but following these very general guidelines should put you on the path of tax-efficient investment management. There you have it, asset location. If you haven't done so already, I invite you to check out our website, subscribe to my blog, follow me on Twitter, and connect with me on LinkedIn. And as always, thanks for taking the time.